Hey guys, welcome back. Johnny here, and if this is your first time watching, I show you how to invest in the stock market. So if you like that kind of stuff, feel free and subscribe to my channel and click the little bell so you don't miss anything. Today I wanted to go over a penny stock, UMC, which is United Microelectronics. Some of their tags are electronics, semiconductors, and radio. As you can see, 22% of analysts do say to buy here, and they are owned by 4,400 people on Robinhood. Right now, you can get this stock for $2.78, which actually isn't too bad. Now, if you're not familiar with United Microelectronics Corp, it engages in semiconductor foundry businesses. It offers metal oxide semiconductors, logic wafers, mixed signal wafers, radio frequency, complementary metal oxide semiconductors, and so on, high voltage integrated circuits and stuff like that. So they have 20,000 people that are employed with this company. They're headquartered in Hsinchu since 1980. They have a $6.71 billion market cap, so they do have a lot of money to work with. Their PE ratio is at a 16.50, which is great. I like that. It's nice and low. Below 20 is awesome. Dividend yield, now this is awesome. They pay a 3.48% dividend yield, and they're only a $2.78 company, which is pretty awesome. They've been doing this for quite some time now, so I thought that was kind of interesting when I was going over some stocks to do videos on, and I thought this one would be cool to do. Their average volume right now is 1.15 million, so they definitely have a lot of people looking at this company. They're 1% higher right now on their average price paid, which isn't bad. Could be because you're paying a dividend that their growth isn't all that high. But as you could see, for the 1 year, they have a 17% growth. That's pretty good, as well as being able to pay that dividend. Now, 22% of analysts are saying that this is a buy, whereas another 57% are saying it is a hold. Their earnings per share right now has been pretty steady for quite some time now, right around the 5 to 6 cent mark. Now that's great to know for a steady dividend paying company to have a nice steady earnings per share. With that said, let's go over to the street rating. Right now, the street rating are saying that United Microelectronics Corp, or UMC, is a C+ or a hold. Now, they just barely missed the buy mark, but they do, on this, says they pay a nice annual dividend yield of 4.22%, which is 12 cents per year. Not bad. They have $7 billion market cap, like I said earlier, and right now they are in a hold position since 2016, although they've had significant growth since then, from about $1.75 up to $2.75. Now, while they're paying a dividend, it's great to see that this is also increasing in price. That's almost 100% in about 2 years. Now, just to clarify, some of the company operates through water fabrication and new business segments. It also provides circuit design, masks, tooling, wafer fabrication, and assembly and testing services. So that'll help clarify. I like the street's description of the business a little better than Robinhood's. They've had some nice growth in revenues. Some of their highlights here are suggesting that, or well, actually not suggesting, but they're stating that During the past fiscal year, it's increased its bottom line earnings by 12 cents versus the 10 cents in the prior year. This year, the market expects an improvement in earnings to 14 cents versus the 12 cents. Despite currently having a low debt-to-equity ratio of 0.40, it is higher than that of an industry average. So they do need to bring some of that down a little bit. They also are demonstrating quick ratio of 1.77, which is high and demonstrates strong liquidity. The company's net worth growth for the same quarter 1 year ago has significantly outperformed compared to the semiconductors and other industries average, but is greater than that of the S&P 500. Now, that net income has increased by 66% when compared to the same quarter 1 year ago, rising from $69 million to $114 million. So this is a penny stock that is making significant amounts of money. Net operating cash flow has declined marginally to $455 million, or about 6%. Now that's not bad. That's probably due to a few different factors. Also remember that they do pay a dividend. Now you don't really see that much with penny stocks. And also being able to be profitable on their earnings per share. Usually you'll see companies pay 6 to 10% for a while, even though they're showing negative earnings per share as a way to pay back some of their shareholders, some of their profits, pretty much before they either go bankrupt or they just have a major decline in the stock price. Now, as you can see, UMC here is at 4% revenue growth and 31% EBITDA margin. Now, it is in a favorable position here, as well as here their revenue growth at 5.42% and earnings yield at 5.38%. So that is nice. It is in the middle. It's keeping up with some of the other companies. SWKS, or Skyworks Solutions Inc. is another company that I want to do a video on, so that's interesting. Stay looking forward to that. Again, a little recap on their net income, the PE ratio, and their market cap, as well as their price right now currently, and also the competitors or peers that are in the semiconductor and semiconductor equipment. Haven't looked at a lot of these yet, but I probably will and be making some videos on that. Moving on though to the stock factor score, their growth is 3 out of 5 stars. Total return is 4 out of 5 stars. Efficiency is 3.5 out of 5 stars. Price volatility, 5 out of 5 stars. Solvency, 1 out of 5 stars. And income, 4.5 out of 5 stars. So that is great statistics here. I would consider this a buy if you don't own it yet. It's a cheap enough company to just put a few dollars in and see what happens. As far as seeing what happens, though, they are showing profits for the future, profits in the past, and continuing to grow their price toward a higher number. Now, with that said, I could see this company going up maybe another $1 within the next year or two, but having that nice little steady income does help out a lot. So right now the stockholders' net worth has decreased slightly since last year by 1.22%, but that's not that bad due to their financial statistics. I believe that a lot more people are going to be getting involved in this company a lot sooner. So if you guys like this video, please smash the like button. It always helps to know that you guys like these videos. And if there's a company that you want me to do for you and I can review, then just drop the company you want me to do in the comments. And guys, remember to subscribe if you haven't. I got lots more content coming out. Alright, and have a good day.